Welcome back to another video, guys. We have 3 new IPOs, Bitgo, Equipment Share, and Ethos. And in this video, I'll be ranking these. And surprisingly, I actually do invest money in all 3, and I actually like these, and we'll see where I place them later. So introducing the IPOs here. So I won't be using the same exact things standard I've done over and over again in the other videos, but I will be breaking this down in a way where I think is optimal with only using the metrics that are needed for this video. So a little bit of a shorter one here because we do have Bitgo coming out on the 22nd, which is literally tomorrow or today or the day after if you're watching this later, but coming at a $2 billion valuation, probably the ones y'all came here to watch this video for. But surprisingly, I like them. I like it a little less than the other ones, and I'll tell you why later. But it's actually profitable, which is really, really rare for something this small. But it might be a little bit skewed, as we'll get into why the numbers doesn't say the full picture for this company. But they're not really like Gemini or Coinbase or Robinhood, where they sell it's like a store where you buy crypto at. No, they offer crypto protection for clients and customers alike, and they secure transactions with them. So they could do $1 million transaction of crypto, only get like $1,000 fees. Little bit different than Gemini here. So next we have the construction equipment rentals tech company Equipment Share, EQPT, coming at $6.41 billion on the 23rd, the day after Bitgo. So what do they do basically? They're a construction equipment rentals company's tech, obviously, I just said that. What they do is they basically rent out construction equipment rentals, and not only rent it out, they find customers and they find buyers for the equipment too. So they're like the middleman, and they rent it themselves. Tech online like that. And they also rent out construction technology. I was really surprised at how profitable this sector is, averaging around 138% over 5 years, and all the way up to 228% in 5 years, which is crazy. The renting space online actually doesn't bring in a lot of investors, but makes a ton of money. Next is life insurance, which might be the sector that's the least volatile out of all of these, but comes in at making about 80% in the last 5 years, and all the way up to 133% in the last 5 years, with Ethos being one of the best companies in there, which I'll tell you why. Life insurance with all. What does this mean? They're not just a life insurance policy. They want to do everything for you. All the other insurances, they want to do all the paperwork for you. So it's nice and simple with a little bit of AI and technology sprinkled here and there. That's basically what they do. Ethos Life at a $1.26 billion coming in on the 29th. Pretty small for an insurance company, but we'll see. So I will not be using P/E ratio for this video. As you see, I'll explain why. Implied valuation, net income, not really important right now because we have nothing to compare it to, just straight numbers compared to valuation. So let's start with Bitgo. So about the same valuation as Gemini when IPO'd, but look at this, P/E ratio. So I think Gemini was around 15, which was also on the lower end, which was kind of nice, even though their financials were really, really bad. Well, it's kind of hard for Gemini to have a P/E ratio because they weren't profitable, but besides the point, this is pretty low for a crypto company, right? Well, basically, they're able to skew this in a way to where their forward PEO is actually 72 times X. So that's following next year, 2026, or going into next quarter, right? And this is just now because they found a way to skew it. Like I said, they can write off whatever transaction they do as the transaction amount. So if they did $1 million transaction, they can write down $1 million in revenue, even though if they only made $1,000 from the transaction. But still, I think this is going to do well, even though if they skew some stuff like non-one did, but I'll get into that once we get into their numbers. Equipment Share, really good size, but look at this, 620 valuation. This is 620 P ratio. This is why I cannot use this number, because they have razor than EBITDA. They make a razor thin margins, right? So I'll be using EBITDA, which basically takes in cash flow and discounts towards depreciating assets, because they're Equipment Share, they're a rental company, so they can write off all of that depreciation. So that's why I need to use this over P/E ratio for the company. Lastly, we have Ethos, probably the most accurate P/E ratio, but what this doesn't say is the growth. They have 50% year-over-year growth, specifically 55% year-over-year growth, and 20 times P/E ratio is actually very low compared to the competitors. Even though they have the highest P/E ratio, which means they trade at the highest premium, it is justified because of how much they are growing, and they're such a small company, which is great numbers here. So first, let's get into Ethos here. Let's go. These are our insurance companies. You have Aflac and these two. I've never heard of this one, and Primera, and we have Globe Life here. So P ratio, we can see that they're far ahead of the game, almost double times the valuation as Globe here, and with the highest being Aflac. But we see Aflac's annual growth rate, it's only 3%, and even Globe, the cheapest, is only 5%. The closest coming at 10%. They grow to 50% more. I don't know what times, but this is astronomically, probably like 1,000 times more. Well, probably exaggeration, but something like that compared to 5%. And their PEG ratio, this is my preferred ratio for this life insurance company. Why? Because PEG takes into account P ratio, the valuation, price to earnings versus actual EPS growth here. So if that, anything under 1 means it's technically undervalued. So look at this 0.44 compared to growth. Aflac trading at 10 times higher PEG ratio, and they did 133% 5 year over year, 55 years ago. So 1 year, 2 year, 3 year, 5 years, and negative this year, but over 5 years, that's still a good number, and they're trading super high valuation right now. If you've seen the commercials, you can know who Aflac is. And then we have these ones at 1.2 around fair value and 2 double above fair value, but that's because their lower P ratio, but also because their growth ratio is so small, looking like a discount right there. Next, we have equipment share, which I choose EBITDA for this, which is basically discount, which is taking cash flow, discounts appreciating assets as well. So that's why I use this one basically. Sorry, a little tired. Enterprise value. So basically, the equipment share is actually at a higher valuation. I think a lower valuation than this, or like 6.1, right? But the enterprise value is higher, which means they're trading at a discount. All these companies, their enterprise value is higher. Their enterprise value is lower than their actual stock value. That means they're trading at a premium here. And with this, they actually have EPS revenue growth is actually much higher. 2 times most of these companies, which is actually insane, and they're trading at discount as well. Like EBITDA, it's about even as we expect for them, but their revenue growth and their enterprise value, assuming the growth, this is why these ones are technically trading at a premium compared to EBITDA, because their growth rates are much astronomically lower than equipment share company. But there's also more good stuff that comes with equipment share, as we'll compare all 3 IPOs with backing. They have the most backing. Lastly, you have Bitgo, which I don't really like this metric I actually used, but there was really nothing else I could use for this company. I did market cap versus assets on platform, which is their market cap, which is how big are they versus how much what is their valuation, like market size, versus the assets like the crypto they have on their platform. As you see, they're 2%, but I have 2 mega companies which might have stocks involved and other stuff as well, which is why they're so much higher. So I compared to something like Gemini, which is a smaller company, but yet again, they also have a store platform and credit card and stuff like that. Theirs is this crypto transaction storing. So really bad metrics, but not the full story. You may have seen articles or people saying TikTok they had 4 times revenue, like year over year, but that's not really accurate. It's kind of skewed because, like I said, they're 2 transactions only, and when they do $1 million transaction, they make $1,000 from that, and they can write down sometimes $1 million in revenue when they actually didn't make that because they only did $1,000. Kind of skewed. Is it illegal? No. Do I understand why it's not illegal? No, I don't. But there's lots of hype. Just to let you know, and what I'm talking about later, Bitgo is actually backed by Goldman Sachs. And if you didn't know, the Gemini was a very shit company. I'm going to excuse my language. A very bad company. But what made them so good was not only the hype of being a crypto company, was because the NASDAQ came in 2 days before they IPO'd and said, hey, we're going to put in $50 million in, which isn't that much compared to the actual valuation they had, which was like 1.6, but still a significant amount, and it made headlines, which made people want to get in this. And it took up more buying power, which Gemini was able to go up 50% before they tanked back down to even and back down 50. So that was before they tanked. So like we said, backing actions here, doubling down. So the insiders are buying 20% of this, and this is no small feat, guys. $6.2 billion. 20% of 6.2 is a lot. That's like $2.07 billion right now being bought by insiders. People are loving this. And then Bitgo is next. It's 12%, filled up mostly by Goldman and Galaxy. I love Galaxy. Galaxy, what they do is they buy little small crypto companies, like they buy some Bitmine and they buy some other WorldCoin stock, the stock called WorldCoin, and they just let it run. So that's a good sign. Very bullish from them. They're more on the volatile play. And Goldman, of course, if you're Goldman, if you're NASDAQ, if you're known like that, if you're JP Morgan, and you're backing a stock, because Goldman does the banking for all these stocks. Goldman is banking for these, using investment bankers to valuation. But they're actually backing and buying stock. That's the main difference between them as well. And of course we have Ethos. It says cashing out. I don't really like that term, but it's because it's the lowest, less than 5%. Still a very good company, very good numbers. The best numbers, close second best numbers, but best insider action and best valuation. So we have Bitgo standing in the middle with the hype. Like I said, going into my rankings here, equipment share 1, Ethos 2, Bitgo 3, I'm allocating some. Least excited for this. I know I'm more on the conservative side, so when I hear some scandalous actions like I did with Navan, I get nervous, and just because it's gonna be very volatile. But I'm projected over maybe like 20% in the first day, or even more if since it's a crypto company. People like Joan Invest is putting a crap ton of money. He constantly goes back and he says, "Oh, bullish! Look at bullish," and he says, oh, look at the other one, Circle, look at Circle. Net, of course, he never mentions Gemini. Of course, he doesn't. But besides the point, crypto is very, very bullish. But I actually think it's not in the greatest spot right now because it's not doing too well. But in the future, I think it's going to do well, which means Bitgo is going to do well as well. I think this is a very, very, very short hold. Equipment share and Ethos could be potentially longer holds, but I think if we make enough on the first day, or if the real P ratio comes out and it's close enough to mine and it's looking good at the valuation side and the earning side, might as well keep some and sell most of it as well. But Bitgo is definitely get out like in the first 5 minutes open. That's definitely a strategy going forward. So I'm posting more, maybe a quick TikTok video. But if you have any questions, I will be most likely I will be live streaming Bitcoin. I have class. I'm not sure. I think if my class comes first, I will see. I'll post a message out that I can't be streaming, but I'm pretty sure I'll be streaming. If you have questions, comment down below in this video and comment on the stream, guys. I'll see you guys later.